right, good morning. Again, I'm Michael Salerno with F&BO, and I've got my panel here. I'll let them do a brief introduction, and we'll dive in.
Hi, good morning. As mentioned, my name is Susan Meyer. I work in product development for the clearinghouse with the focus on real-time payments.
Hi, everyone. Bethany May from JP Morgan Chase, and I focus on real-time payments commercialization.
I'm Evan Goldstein with Visa Direct, which is a unit within Visa that does lower value money movement related services, domestic and cross-border.
Great, and we'll just dive into the discussion here and joined by the panel. I'll direct the first one to Susan, but to start off, really talk about RDP. What was the vision for RDP and where is it today?
Yeah, RTP's been in network or in production for 7 years. The clearinghouse has been in business for over 170 years, providing a payment infrastructure for both high-value payments, low-value payments, checks, and real-time payments. I would say RTP came about because of a response to a call for modernization of the payments landscape. And maybe more importantly, or what was driving that call for modernization, is to meet consumer demand. I would also say that in our 7th year of maturity, and I've been in RTP in various roles for at least 7 years, probably a little bit more. I would say in our 7th year of maturity, many of the original use cases that were contemplated for RTP or real-time payments, they're still in market today. So originally devised to sort of be a replacement for cash in many ways. One of our first use cases is still one of our highest volumes, wallet defunding. We also support P2P, so the whole scale, although we're primarily consumer transactions, we do have commercial, corporate, and other B2B transactions. But I would also say that there are use cases in market today that probably weren't contemplated when we were first thinking about RTP. So earned wage access is a good example. So who would have really thought there would be a market for payroll for faster payments, because ACH does a job really well, except in these times where maybe there's, the move towards gig economy, and in times where people have financial strain, it is important to get paid, right? Earlier, more on time, either weekly or, per job. And as the world continues to change, RTP will continue to meet that market demand, right? So there are things like merchant funding. I think that's also a great use case for RTP. Small businesses really need funding. I think that we saw that, especially in COVID, when restaurants were especially strained for funds and maybe really needed that cash flow to buy the next day's produce. The ability to settle that merchant terminal in real time or faster than legacy systems was critical to their business. Sports wagering came about. I don't know if anybody voted on or betted on the Super Bowl, but that's also another big use case I think that we see in market. 2024 was a really exciting year for RTP. We saw exponential growth. 18 months after hitting our half billion transactions, we hit 1 billion transactions. And on that same day, we had record volume and value. You may have recently seen we raised our transaction limit to 10 million. So this past weekend, we raised our transaction limit to 10 million, and we had our first $10 million transaction. I think what I'd say is, while we probably won't see a lot of volume at those higher thresholds immediately, it does open opportunities for differentiated use cases, like large mortgage closings or loans, high wealth individuals, things along those lines. Just a few stats, and then I'll let Michael move on to the next question. We are nearing 900 participants. We have 70% DDA reach in the United States. But we're technically enabled to reach 98% of DDAs for credit unions and those small community banks. And what that means is we have laid the infrastructure with their service providers, and now it's just turning them on. And I think what we'll see in 2025 is continued use cases for send. So in, that basic credit transfer, enabling banks who are already on our network to onboard new originators, new use cases, onboarding new send-enabled banks or participants. And that's what we're really focusing on, is like really driving that send volume up this year. RFP is also, a request for payment, is also a topic, a use case that we're investing some time in. I think that has a longer tail, but we should see growth in request for payment over the next couple of years as well.
That's great. And Evan, from a Visa perspective, how do you view real-time payments?
Yeah, thank you. I'd like to back up because I think a lot of what Susan said is quite interesting in terms of, well, why? And so having lived overseas for many years, Bethany and I were talking about what it was like to move back to the US and realize that, with such a large economy, it's oftentimes easy to be inward focused, and you realize there are so many real-time payment systems elsewhere in the world. And the US, I wouldn't say is necessarily playing catch up, but it's certainly, not at the forefront of real-time payments. At least it certainly wasn't, but it's taking on, the adoption rate is actually pretty high. I think that one of the things that was most shocking is the number of checks still in issuance today. And, I know the Federal Reserve Philadelphia has a nice little graph that shows, since 2000 where check volume has gone. Initially, I think in terms of transactions, in 2000 it was like 40 billion checks written in the US. And in 2022, which is the last time they had a number captured, it was 11 billion. So there are still 11 billion checks written every year in the US, which is, in my mind, quite astounding, especially when you consider the costs associated both from the financial institution side, with the whole check process, but then, the delays associated with the individual who's receiving that check, having to cash it. Oftentimes, given that fact that so many people in this country live paycheck to paycheck, that was another interesting stat. B of A Institute suggests that about 25% of families are spending 95% of their paycheck on needs-based, things like mortgage or rent or, fuel, childcare, things like that. So the need for a real-time payment or a faster payment modality and mindset in the US is certainly there, which I think jives well with what Susan was saying in terms of earned wage access, which is, absolutely, I would say, a fundamental use case that we've seen in Visa, because, you might be paid on a 2-week payroll cycle, but you have these needs that crop up nearly every day. And you want to be able to get your, pay for food and, fundamentals, especially, in today's world where you see the price of eggs is like doubled. And if you're living paycheck to paycheck, that does matter. While Visa Direct is, a lower value, but the card-based pay rails that we're working off of have tremendous scale, tremendous reach globally. But in the US, focusing on the domestic side, we basically have ubiquity with accounts, because whether it's a Visa Direct, a Visa debit card or a MasterCard debit card that you're pushing funds to, we have access to that through a gateway capability. And so without going into, all the stats about, what our capabilities are, I think the point is that there's a lot out there today that's available to financial institutions and to consumers and small businesses. And the question that everyone is trying to figure out, especially if you're not a top-tier institution that has the capital and the people and the technology to place bets all over the place, which one do I use? Where do I spend my time and effort and my few skill resources on this stuff?
Yeah, that's great. And kind of getting back to the why, we'll ask Bethany here, why are your clients choosing real-time payments, and kind of what are the benefits that they're experiencing?
Yeah, that's a really good question. And first, I just want to say that any opinions or views that are provided are my own here. But just to build on what Susan and Evan have shared, I think what we see in the market is that the marketplace is evolving, and expectations in the market are evolving along with that. You think about signing up for a streaming service, right? You can sign up for a streaming service and instantly have access to stream content on demand. I live in New York, where any time of the day I can have food or groceries delivered to me to my door within 30 minutes. And why shouldn't money move in that same way? And we see that consumers and businesses are starting to expect that faster service like they have in their other service providers. So we see that our clients are really drawing towards real-time payments, where they can draw on that real-time movement of money in places where they can really significantly solve one of their customers' pain points or significantly enrich the customer experience for their customers. So think about an example here. Think about an example of an insurance claim. Imagine you're laying in your bed at 2:30 in the morning and you hear the soft pitter of rain outside and you think, that rain sounds a little too close for comfort. I think it's happening inside my house. Sure enough, your water heater has busted at 2:30 in the morning and it's flooding your house. I say this is hypothetical, but it's not. This happened to me a couple years ago. I tell you, it is not a fun experience. And all of a sudden, an emergency, a financial crisis is thrust upon you. How am I going to solve this? How am I going to meet these needs? Enter real-time payments. The insurance provider can look at your claim, see yes, it's valid, and be able to get you those funds so that you can meet your financial obligations when you're having them in that crisis, nights, weekends, holidays, 24/7. And our clients then can feel reassured knowing that their customers have the money in their accounts immediately to be able to meet those obligations. So the benefits of real-time payments here are really, across both our clients and our clients' customers. Our clients can use real-time payments to differentiate the service in the market. They can potentially attract new customers who are attracted to those flexible payment options to be able to choose a real-time payment if they need it. Providing that convenience of choice to their customers. Not only does this enhance their customer experience, but it also really deepens loyalty. Imagine situations where there's an ongoing relationship, and if I know that my service provider is going to give me the choice of an immediate payout or an immediate access to earned funds, that may be something that would make me be more loyal to that provider. And ultimately, the benefits then to their customers, the end user as well, is increased cash flow, and of course, increased control over their financial situation, which can be critical not only in times of an emergency, like I just shared, but think about small businesses. Cash flow is a lifeline to small businesses, and being able to access funds on demand to meet either a vendor obligation or pay your employees can be really critical for these types of businesses.
Yeah, that's great. And obviously, real-time payments has been featured here a lot, and so is ISO 20022. So with that, Susan, I guess my question would be, do you think the rollout will influence or not influence real-time payments?
Yeah, I feel like we've been talking about ISO 20022 for quite a while now. I don't think it's going to go away, right? I would say that payments in general, both globally and domestically in the United States, are definitely positively impacted by the use of the 20022 standard. Bethany mentioned and Evan mentioned a bunch of different types of use cases. They all benefit from rich data, right? From the data that can be carried. And I think as schemes, both low value and high value, move to 20022, there'll be economies of scale and benefits from a banking perspective, and the data being housed in the same places on similar messages. So RTP has been ISO 20022 since its inception, 2017. FedNow is also on ISO 20022. Our CHIPS product, which is our high-value wire product, moved to ISO 20022 last April with resounding success, and next month, FedWire will move to ISO 20022. So think about all of those schemes or payment types basically speaking the same language, and being able to house rich, robust data in all the same places or similar places within the message. So how would that benefit? What are the tangible benefits to that, to you as a financial institution, to that? Like, so improved operational efficiency, less returns, less claims, less investigations, resulting in a better client experience or a customer experience. Hope that it would be a road towards technical modernization of some financial institutions' legacy systems. So it puts you on the road for modernization of legacy systems. And then also the data structure and the data content of the message really lends itself to fraud prevention, crimes, financial crimes prevention, because you can pull the data for scanning and analysis much easier than in systems that are or payment standards that are very disparate.
That's great, and just thinking about having all these payment types, having the exact type of language. And earlier you talked about just enabling the software providers to reach a lot of different customers through their DDA. I guess I would ask Evan then, how would access to real-time payment systems for both credit unions and community banks impact future adoption rates, and what impact would that have?
Yeah, thank you. I think, so I'd like to build off again of what Susan's been saying, and it's really important to understand that while there is tremendous demand in the marketplace, especially on the consumer side and then in the small business side, and B2C payments, I think, is a tremendous opportunity for financial institutions. There's also, a major consideration for banks themselves. And, what I would say is, when we sit down with financial institutions, a number of things come up. How do I improve my acceptance rate on new account openings? How do I deal with, pre-validation issues, both for the financial institution's sake, but also the consumer experience or the business experience? Because in today's, real-time everything world, that UX is so critical, especially as you're competing now with fintechs, neobanks, brokerage firms, and the list goes on and on and on. And I think that if you're a community bank, credit union, a regional bank, and you don't either have the time, money, or resources to consider all of the options that are out there today, it can become incredibly challenging to the point where maybe, the idea is, well, I won't do really much of anything right now. I just want to see how things shake out. But you can't, because the competition isn't. And so what Visa has done, what Visa Direct is trying to do, is to partner with third parties to try to make that whole experience a much easier packaged solution for community banks, credit unions, and regional banks. And by that I mean, we can help with the integration effort, whether it's APIs or SDKs. It's all about how do you help with those pain points that the institution feels, and then help them think through, well, where do I want to now apply this in terms of my client base? How do I reach them? Because there is this hyper niche focus with ERP systems and fintechs, getting to the point where when you consider use cases, it's not just the healthcare industry, it's doctor's offices receiving reimbursements. It could be something like, on the contractor side, we just announced a big opportunity with X, content payouts. And the experience has to be customized to really drive adoption. And so we try to work with our clients and our partners to bring certain insights and knowledge to the table to help them with that experience. Because having the capability and the functionality is one thing, getting the adoption from the client base that you're trying to reach out to is a totally different experience, and it doesn't guarantee, having the functionality doesn't guarantee success. And so I think you really have to look at it from both sides of the coin and take that perspective.
That's great. And Bethany, I'm curious, just based upon your experience and global reach and view, what are you seeing in domestic real-time payment, processes and schemes in other markets?
We're seeing a lot, actually. So, we're talking about the US market, and it's such an interesting market and obviously a key focus, but the reality of real-time payments is that a lot of the story is happening outside of the US. We are seeing really rapid adoption and growth in real-time payment systems globally. We're seeing an accelerated pace in both users of the real-time payment systems and volume growth. I'm sure we can all think of notable examples of Brazil's Pix and India UPI, which are definitely major success stories, but there are a number of countries that are really experiencing tremendous growth. Thailand, a number of countries in Asia, a lot of places where there were previously more cash-based economies now moving towards digital payment economies. So I would say that's one big trend that we're seeing. Another trend that we're seeing is investment into real-time payment infrastructure. So we see a number of countries that are either upgrading existing infrastructures to be 24/7 to support lower value real-time payments, or implementing entirely new infrastructure. It feels like almost every couple months here, we see a new announcement of a country that is saying they're going to implement a real-time payment infrastructure. So I can think of Saudi Arabia recently in the last few years announced SARI, their instant payment system, Colombia, a number of LATAM countries. So a lot of investments around the world into real-time payments infrastructure. And as these countries make these investments, and as consumers and end users in the market adopt the real-time payments for a variety of use cases, we ultimately, of course, see displacement of other payment methods, most notably cash and check around the world, towards more of a digital payment economy. With that, we see efforts from countries to really harmonize real-time payments with potentially like the ACH system in terms of reach and ubiquity and potentially even pricing to make those real-time payments as ubiquitous as ACH has been. We even see countries making efforts to phase out ACH, like in Australia. One thing that I think is really interesting in countries outside of the US that we're seeing some real-time payment infrastructures do is implementing capabilities within the infrastructure itself to streamline payment collection process. So I'm thinking here about QR codes and mandate management for direct debit. We do see some real-time payment infrastructures building in those services within the infrastructure itself. And these can really provide a streamlined user experience for payment collection. So think, for example, for the use case of a biller. Before QR codes or mandate management, a biller would have needed to put together an invoice, right, digital or physical, whereby they have the customer's account number, they have the payment amount due, some details on what's being paid for in the invoice and where that money can be sent. They send it either physically or digitally and hope and pray that the customer gets that invoice, pays it in a timely fashion, pays the correct amount, that when they receive that money, they know which account it's tied to. But you can see there's a lot of opportunity for things to go wrong. There's a lot of manual processes here. There could be errors, issues with reconciliation when the payment is received or cash application. So there's a lot of opportunity to digitize that process. Enter QR codes, right? Within the QR code, you can embed the payment amount that's being requested. You can embed the account details that it's being paid to, the customer's account it's being paid for, and then that QR code can be sent digitally to the customer. And when that customer clicks scan to pay via the QR code, sure enough, all those details are sent with the payment, and the money is moved instantly to the biller's bank account. So a lot of opportunity to digitize and streamline that payment collection process with some of these value-added services within the network.
That's great. Well, the last question is kind of how I normally like to end. And we did this last year, and I think a lot of things that were predicted came true. So pressure's on, but we'll start with Susan. So what predictions do you have for real-time payments?
I like that I've gotten to go first every time. Thank you.
You're very welcome.
So, as I mentioned before, we see real-time payments and our year in RTP as like the year of send. So I have to say, I think 2025 is going to be a year of greater growth generally for real-time payments domestically, enabling more participants and connections to smaller financial institutions, adopting new use cases, building on the existing use cases for credit transfer. And finally, I do think that focus on request for pay and other types of messages is something that we'll start evaluating. I think it's an important part of the suite of products in real-time payments, and it's a solution to some other types of legacy payments that might be better suited for a request for pay. So I think those are the areas that are of focus for us in 2025. And I think it's going to be a banner year matching 2024. So a continued growth for sure.
Sure.
I'll go next, yeah. I think, Susan, I think you're spot on. I think in terms of increased sending on the network, I would say, as I mentioned earlier, that the market is evolving and customer and business expectations are evolving. I think we're going to continue to see that trend only accelerating. And I would say as consumers and businesses get the opportunity to interact with real-time payments for the first time, as they experience that and they think, hey, it feels really good to receive that money in real time, I think we're just going to see that trend continue to grow, where they're expecting that from more and more of their service providers. I would also say that as the ecosystem, grows up to support real-time payments, and as more business solution providers integrate with real-time payments, I think this is going to expand the accessibility via different channels and connectivity options to real-time payments. And I think we'll see, as Susan mentioned, a wider access and wider diversified industries connecting to real-time payments and supporting for a wider variety of use cases within that. So I definitely think we're going to see the year of send, I agree.
Pure chaos. Yeah. I mean, sort of, in the sense that I think that when you take everything that we've heard today, even on AI and open banking, and you put in that equation less friction around the movement of money, then increased sophistication and fraud. I think that plus hyper-competitiveness around the consumer experience and around the small business experience is really going to force players to, have to take a stand somewhere. You can't just sit on the sidelines and wait things out. So I think that in the next few years, I would expect to see a greater number of financial institutions playing a role in some sort of a real-time payments strategy. It's going to have to be connected to the overall user experience, and that's going to have to be hyper-defined. I also think that modalities of payment, which we're seeing today, are going to start to come together. So transfer from one wallet to another wallet, the ability to pay someone out through a card directly to their account, cross-border, I know is something that is not necessarily the purview of this panel, but the idea that an individual or a company could be able to use whatever the bank's channels are, and perhaps be agnostic to the individual or to the institution, to the small business, what specific channel or rail is being used, but they'll be able to say, I want this to go cross-border and I want it to go to a wallet, or I want this to go, I don't care about speed so much as security, and so I choose this route. That type of optionality is going to have to be at the forefront of the decision-making process, and that, of course, is going to have to be, to have a tremendous amount of security, tokenization, whatever the, the technology is wrapping around it to protect all participants.
Great. All right, I think we're open for questions here. I don't know if anyone's submitted. All right, who would like to take the first one?
That might be me to start anyways. The first one is the ultimate goal of FedNow and RTP to move commercial payments from FedWire and chips like the way NPP is progressing? I can only speak for RTP. No, I think that even though we did raise our dollar threshold recently, I think that it really isn't to move from one payment channel to another payment channel, or to use a very bad word, cannibalize like the high value payments. Like, that's what everybody's thinking, right? It really wasn't for that purpose. It really is, there are use cases that are specifically needed for faster payments at higher dollar thresholds. And I personally think that across the various payment types, like the legacy payments, that there's still going to be a need for some of those legacy payments for a very, very long time. I could argue not check. Based on what you said. I think we all would love if there wasn't as much of a need for check. But I do think that it is not for that purpose, no.
Great. And I think we can combine a couple of these. The first one is, do you see the adoption of cross-border real-time payments in the United States with, can the domestic rails of RTP and FedNow be used for cross-border settling the U.S. leg? So maybe if someone has some comments on using these rails to actually initiate or settle cross-border payments.
I think it's me again. I do think someday, that's one of the purposes of 2022, right? So someday we will connect schemes cross-border. And I have to think back, it was 2025, so it was like 2021, I think, October, we did a proof of concept with Europe on could you really connect schemes cross-border? And then we actually followed it up with like some testing and work around a minimally viable service for it. And anything's technically possible, right? Especially when you have similar data structures, and even actually when you don't, if it's two different data, it's just like mapping of information. It gets complicated when you think about the regulatory requirements and the compliance, and we are focusing domestically, but we are always keeping an eye towards that cross-border connection. IXB is something that is still in our pipeline. It's prioritized behind some other work that we're doing. And so just to answer that question for RTP, and I can say also for FedNow, but I can't speak for them, we aren't currently connecting cross-border real-time payments. There is the second part of that's a slight variation on cross-border connectivity. It's more like, could you process the domestic leg of something that began across border? I will say that's something that we are evaluating, so less about connecting schemes for payment movement and settlement, and more about like if something began as a payment outside the United States, could you settle it as a leg in the US? So it is something we are evaluating. I don't know, I answered all of them.
I'd be happy to.
Yeah, feel free to ask the other two, or if the panel has a question for one of the other panelists.
We do cross-border today through Visa Direct, and it's our proprietary system. It's Visa Net, and so we have a network of 15,000 banks globally, reaching 190 countries. That allows you to use basically the same series of APIs you're using for your domestic to card, to push it real time. And by real time, we have to say it's less than a minute to local schemes around the world. It's not stepping through the local ACH system. We have a different capability for that, but it is going through our proprietary network. And so it's rules-based, it's Visa rules. So there is a whole dispute mechanism process in place and all of the security around it.
I think you just answered the question that popped up. It says, how does Visa handle cross-border?
We also have, and I'll just make this one really quick because it does sound like a sales pitch, which I don't want to do. We have a capability called Visa Payments Limited out of the UK, which is a two-account capability, and that's a pre-funding model. And so that's how we connect through the local ACH schemes through a traditional network of correspondent banks and other partners. We also have partnerships with TerraPay and Tunes to access wallets. And of course, this is all API driven.
Well, unless any of the panelists have any questions, I think that ends our session. And I'd like to thank the panelists for their information and volunteering to do this. And thank you, everybody, for attending. Appreciate it.